Hello traders, this is Joanne with In Forex. Welcome to our Forex market news broadcast for Monday, February 11th, 2008. Headlines this morning out of Switzerland read, dollar steady after G7 weekend meeting. The dollar held mostly steady early on Monday after a weekend meeting of industrialized nations passed little comment on currencies. The euro found some support as the ECB challenged talk of early rate cuts. The group of 7 finance ministers, known as the G7, cautioned that the global credit crunch would drag on the world economy, but left it to individual countries to provide their own remedial action. The discussion of a single currency was aided by European Central Bank's President Jean-Claude Trichet, who warned the market not to bet on a cut in interest rates because of persistent inflation pressures in the Eurozone. The Eurozone finance ministers also sounded relatively relaxed about the euro's strength against the US dollar. Investors still seem to be betting that Europe has not decoupled completely from the United States and will be impacted badly enough to force a policy easing in coming months. Such speculation dragged the euro-dollar down last week, taking it to as low as 144.40 at one point. On Friday, the euro-dollar edged up to 145.64. Today, the market was expected to be thin as Tokyo is closed and China is still celebrating the Lunar New Year. The dollar-yen was sitting at 107.31 unchanged as risk aversions kept the Japanese currency underpinned. The biggest mover on Friday was the Canadian dollar, which jumped after strong domestic employment data seemed to argue against aggressive rate cuts there. The Bank of Canada Governor Mark Carney on the weekend said further rate cuts would likely be needed even though the economy had proven resilient so far. The dollar loonie was down to 99.89 at Friday's close. The Australian dollar was holding firm at 89.56, benefiting from speculation the Reserve Bank of Australia could raise rates again, having lifted them to an 11-year peak of 7% last week. The central bank issues its quarterly statement on monetary policy later today and is expected to talk tough on inflation, leaving the door open for more tightening if the red-hot economy did not cool soon. The dollar was slightly weaker in the Asian session as the G7 turned out to be a non-event and traders' risk appetite returned. The euro-dollar trended upward to 145.60, while the Australian dollar got a boost from the hawkish RBA comments, breaking the psychological 9,000 barrier, reaching 90.31. with good momentum. As we expected this weekend, the G7 meeting in Tokyo lacked any new substance. The communiqué was almost identical to that released in October, with the only real difference coming from the language calling for the CNY appreciation, which was softened using the words like encourage rather than stress. With China allowing the CNY to strengthen in recent weeks, we had expected this change in tone. One critical note was the lack of agreement on a coordinated response to the subprime crisis. The RBA statement on monetary policy highlighted the central bank's hawkish tone, which gave the currency a lift. The statement said explicitly that the rate would need to move higher as long as growth continued to stay resilient. Today's economic calendar is on the light side for today and the rest of the week. Looking a little closer at the European session, the dollar was slightly stronger as the markets lacked commitment to a direction. The United Kingdom's PPI won't help an already elevated CPI, and the figures will be released tomorrow. Output prices jumped to 1% versus a 0.4% month-to-month, and the endpoint prices rose to a 2.6% versus a 1% month-to-month. Figures which will keep the MPC stressing the upside risk to inflation in its annual inflation report on Wednesday. The French and Italian industrial productions data for December was additional evidence of a slowdown in activity in the European Union's major economies, with Italy in danger of falling into a recession. The Italian IP was the 4th consecutive monthly decline and pushed the annual rate of production growth down to a disastrously weak minus 6.4%. That concludes our news for today. Thank you for viewing. And before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you can find a link to our Yahoo forum, which is also Succeed in Forex, and some additional information about our Traders Training Center. We hope you've had a profitable and enjoyable trading day, and that you will be able to join us tomorrow for our next Forex Market News broadcast.